This is King World News. I'm Eric King, and you're about to hear from the top trends forecaster in the world, Gerald Celente. Remember to go to our homepage, where we've already had Rick Rule and Bill Fleckenstein. But without any further delay, here is Gerald Celente. Joining us now is Gerald Celente. He's the director of the Trends Research and author of Trend Tracking and Trends 2000 and publisher of the Trends Journal, and is considered by many to be the top trends forecaster in the world. Gerald, we're going to cover so much today. The Bullard comments, what's happening in Brazil. But I want to start off first very quickly with this debt situation. Gerald, I don't have to tell you that there are signs now of a subprime auto crisis. We've been warning about this for quite some time on KWN. You've been warning about it. But they'll give anybody a loan right now that has a pulse, and these people don't pay back their loans. They can default over and over and over again, and they still keep giving them money for a car even though they don't pay on it. This gets back to what you and I have talked about from a big picture perspective, and I know you're going to cover this on your own, but this economy is completely fake. It's not real. There's really 23% unemployment. Real incomes have been falling for a long time. People don't have the discretionary money. The economy's in collapse. It's really stayed in collapse. And the only thing that keeps it going right now is the paper boom in the stock market and the money coming in from the Fed that's booming the housing bubble, because that's the only thing that has people even working out there right now, Gerald. Otherwise, we would really be right back to those 08-09 collapse levels. And I know you took a look at the piece that we put out that covered the massive amount of debt that Canadians had. And some of those stories were almost unbelievable. You'd have people with so much debt, over $1 million, and their incomes would be like $40,000. So it was just madness what's going on out there. And that's how the fake economies really keep chugging along in Canada, in the United States, and in other areas. And I just wondered if you could give us a big picture of the debt and the phony economy and tie it into anything you want to tie it into.
Well, the debt, again, look at the debt bubble in China. Well, they had a total debt of about, $500 billion 20 years ago. Today it's around $30 trillion. Look at the home prices in the hot markets in China. They barely rose in the last month. And take a look at what's going on in Australia. So it's more than just Canada, the United States. It's global. Look at the prices in Hong Kong and going through the roof. So, yes, it's an over-speculation, but let's go back to the cars. You mentioned subprime auto crisis. Well, anybody remember the subprime housing crisis? Just a different crisis with a new name. And when you look at the facts, you're looking at about some 7.5% of loans moved into the arrears in the last 30 days. At the height of the panic of '08, it was just around 10%. So it's closing into that. Then you look at the total United States debt. It tops the pre-crisis panic of '08 peak. I mean, these are facts. And then you look at where's the debt load coming to, because it's all tied together. So now we have a debt level of 12.73 trillion. Now, where's the other debt level? Well, it's coming from student loans. Student loan debt at $1.3 trillion is bigger than credit card debt. Now, what's going on? We got the millennials, right? That's their generation. There are more of them now than baby boomers. They can't buy homes. They got all this college debt. I mean, how could anybody live getting out of college with on an average of almost $40,000? That's on average. And you're getting, degrees in psychology or sociology that cost you $100,000 at the University of Pittsburgh. What are you going to do with it? You get a job as a barista at Starbucks? So this is the bigger picture, Eric, because you have to put it together. 70% nearly of the United States GDP is consumer driven. You mentioned about the reality that real wages have not gone up when adjusted for inflation for 50 years. And now you're seeing the decline in retail. It's more than just online. What did our retail go up? A roaring 0.4% last month? Oh, and they're saying, things are slowing down in China. Retail sales only went up 10.6% in China because they're going to keep that bubble going. They're going to do everything they can to keep that bubble going. Now let's go back into the reality. I just threw out a couple of numbers to you.
Joe, can you cover Bullard's comments from the Fed, also what took place in Brazil on Friday, and how all of that is going to impact the gold market?
St. Louis Fed President James Bullard saying that financial market readings have moved in the opposite direction, and that, as he sees it, that he questions the need for a June rate hike. Okay, don't have a June rate hike. Well, the odds are that it's going to be about 75% says there's going to be one. So if the Fed doesn't raise rates, that's going to be bullish for gold. Because as the stronger the dollar gets, we all know this, the weaker gold goes. There's an adverse reaction. Now, where is the dollar now? Well, the dollar now is back to levels before Donald Trump got elected. The dollar is going down. And there are a number of analysts out there that say it's going to get weaker. That's very bullish for gold.
Speaking of gold, Gerald, I just want to take a moment to talk to the listeners about some gentlemen that are huge winners in the mining business that are quickly becoming legends for their ability to discover gold and put together incredibly successful companies. They founded Asanko Gold in Africa, then Caden Resources, which used to sponsor King World News. Myself and the KW listeners that invested in Caden Resources made a fortune as the company was acquired by Sean Boyd's Agnico Eagle. These guys now have a company that they believe is the most exciting company ever in terms of the projects that they have put together. The stock has been red hot and a struggling market because everyone thinks that this company is going to be acquired by a major company. Goldcore has already made a huge investment in the company, and I'm sure this will turn out as well, if not better, than Caden. The company I'm talking about is Orin Resources, symbol AUG in Canada and GGTCF in the U.S. If you are a serious investor who isn't shaken by the noise in the gold and silver markets and wants to be an investor in this great opportunity, call Jay Adelar at 778-729-0600. Gerald, back to what you were saying about it being bullish for gold.
It's bullish for gold also. While the dollar is going up against some currencies, let's look at the ones that it's going up against. Hey, how about that Brazilian real? Oh, yeah, that's Reale in trouble. What did it go down this week? Nearly 10%, as their stock market crashed nearly 9% in one day. Oh, and what a surprise. The president is being accused of doing a dirty deal. Oh, well, blow me over, man. You know, which one isn't? And then you look at the emerging markets. They all got hit. So gold is the safe haven asset. And that's what we've been saying on and on. Look, gold rose, and it rose. It had its best gains in 5 weeks. Why? Because of political uncertainty in the United States with the Trump administration and the prostitutes going after this guy on a daily basis. I mean, I get a kick out of it, you know. We gotta impeach this guy. You know, he told the FBI to go easy on this guy Flynn. Oh, and that's terrible. Hey, how about the president that started the war called George W. Bush based on lies that Saddam Hussein had weapons of mass destruction? How about the president like Obama that killed over 4,000 innocent people with drone strikes? How about the presidents that gave us NAFTA and lied their way in and out of offices? And they're making a big deal out of this. But what's happening is it's hitting the American psyche. And that's why gold prices are going up, because it's putting on global uncertainty. But there's a very interesting story going on here. The polls on Trump and the prostitutes that are going after him are not stopping the market rally. And the market rally is still going up on hope and expectation that there's going to be tax cuts, infrastructure repairs, and deregulation of many different laws that are affecting different sectors of the economy, which, if you relax these laws, whether you like it or not, are going to boost the economy. So what we're saying is we're in a very precarious situation. Again, you look at China, you look at Australia, you look at Canada, you look at the U.S., you look at the debt levels. What are we looking at? We're looking at over a $3 trillion debt level with the emerging markets. And now they're submerging as the weaker markets are getting hit with uncertainty. So that's where we're standing, and the debt load It's not only the personal debt load. Look, nobody talks about, Obama doubled the debt. We're at almost $20 trillion now. And so when you're talking about U.S. debt in terms of households, how about as a nation? And then you look at the debt to GDP ratios of Japan and China, they're in the 260 range. Oh, I forgot. More austerity measures in Greece. Oh, watch out for the election coming up in Italy. Oh, they're doing great there, too, with about 34% youth unemployment. Oh, by the way, they're going to be having an election over there in Austria, and the Freedom Party looks like that's anti-Eurozone, looks like it's going to get elected. So there's a lot of uncertainty out there at a lot of different levels. Some more aircraft carriers sent by the United States over the shores of North Korea. That should make them really happy. So we have a lot of uncertainty. And again, gold is the ultimate safe haven asset. Bitcoin is going through the roof, but that could change in a day. And you can't take physical possession of Bitcoin. And governments could stop its rise in a second, quicker than they can with gold by shorting the market. So while Bitcoins are going up, we're still bullish on gold as a long-term safe haven asset.
And Gerald, as always, for people listening around the world that want to get involved in the Trends Journal, how can they do that?
Well, they can go to trendsresearch.com, trendsresearch.com. The new edition of the Trends Journal is going out next week. And besides the Trends Journal, of course, which is 60 pages, full color, no ads, print and hard copy editions, we do a Trends in the News broadcast each weekday night. We do trend alerts each week and a Trends monthly. It's the only place in the world where you're going to read history before it happens. And thank you very much, Mr. King, for all that you do to keep people in tune with what's going on ahead of the news and on top of the trends.
And for people listening that want to get the online edition from Gerald, it's less than 29 cents a day. Gerald Celente, director of the Trends Research and author of Trend Tracking and Trends 2000 and publisher of the Trends Journal. Thank you for joining us on King World News.
Thank you, Eric.
Be sure to tune in as we will continue to release interviews with the top people in the world throughout the week. Also, make sure to check out the King World News blog.